Hello, all of you. CA Dipti Chheda here. So we are live again today for the Tax Amendment and Revision Lecture Series for all the 22 exam. 2022 exam. We are live now, and we are taking the second amendment class. Okay. 1 second. I know some, this was a sudden plan. Usually I take lives on Saturdays. But then decided to take it now, and because of some schedule ongoing BCom exams are going on. Okay, now as we begin the second amendment class, some very important instructions are. Today we are doing it in a different way. The first tax amendment class was focused on all the heads of income. Today the focus is on other topics like deductions, return of income. Minute amendments are there, but let me tell you, dear students, the last exam 4 marks TDS, 4 marks TCS, and 3 to 4 marks was return of income. So make sure you note it down right now. Residential status, TDS, TCS, and return of income, you all are going to do with thorough weightage. It's not that just do heads of income and it's over. Okay? Second thing is, I told last time also, I'm saying again, dear students, some amendments are carryover from Finance Act 2020. Today, we will take up very simple concepts of amendments of return of income and all. But whatever amendment lectures are there in the playlist of 2021. Yes, especially the fourth tax amendment lecture, if you see from the playlist, that fourth amendment lecture is for TDS and TCS, the new section which is added, 206, 1H and all. Relevant to that, one more amendment has come. I mean, say one more section is added in TCS, that is 194P and 194Q. So that they are going to ask a 4 marks question in the TDS and TCS for sure. So make sure you all watch the amendment lecture of the last year also. This time they can give you exclusive problem to be solved for 10 marks for a person who is opting for alternative tax regime under section 115 BAC. We have done last full lecture and we have solved the problem. So two instructions. One I said is weightage wise study residential status, TDS, TCS and return of income. Second thing I said is check last year's amendment. And third is whatever PDF I'm using, part 1 which I discussed last Saturday, part 2 which is now, and part 3. But in 3 parts we will cover up all the amendments that will come in the next week. So these 3 amendments PDF are already uploaded in Concept Classes app. From the link below this video, you can download the app, download the PDF, take a print and keep with you. And amendments are actually very easy, but you need to do it repeatedly to get a grip on it. Are you getting? So watch this lectures 2 to 3 times. And last class, how many of you noted the points, the flow charts which I gave in the class? Did you all note it? Yes? Then do the same thing today also. Pause the video. If you want, I will also pause speaking, because like live videos in the YouTube are continuously we should speak. Okay? And even if you are watching it as recording, if you want or have any doubt or query or anything to ask, just put it below in the comment section. We'll surely reply. But then so many queries are coming in tax, and I'm going to discuss one very important query which came after my last tax amendment, goodwill wala. I will discuss later. But only thing is, so many doubts have been asked in the Telegram group, in the WhatsApp group, and I always clear the doubts by a voice note. Okay? So at least give us 1 or 2 days time. If you ask the doubt and if you want instant reply, it's not possible, dear students. Chalo. Let us straight dive to the amendments for Finance Act 2021. Financial year is 21-22. Assessment year is 22-23. a very lighter but simplified topic we are starting now. I'm sharing the screen. If any doubt is there, you can ask me. Huh? Right? We are starting with return of income. So return of income, very minute but good amendments are there. Some of the amendments are already carried forward from the last year also regarding the dates and all. That also I will revise, and then we will shift to the next ones. Okay? One second. Yeah. See, as I'm using StreamYard and some app like that, so that you all can, I can share my screen and also some live app I'm using. I can't see who all are joining. If you can write your name and if you can ask your queries, would be glad to answer it. Okay, all right. Chalo, let us begin now with, we've done with heads of income, except income from salary. I did not do last time, I'll do it. But I'm starting with second part right now. One second. Yes, here we go. Technology, we are trying to make our best friend since the pandemic, but still it takes time. Yeah. So this is the second part of our direct taxation amendment lectures. Let us see what is due in the return of income. Okay. Now this is a, can you see on screen, relief to the senior citizens. Listen carefully. Whenever we use the word senior citizen, no, we say senior citizen 60 years, super senior citizen 80 years. Then here for this section, oh, one addition you have to make, I'm talking about 194B. This is for senior citizen who are having only pension income and interest income, and the senior citizens above 75 years and up. So not 60 years, not 80 years, 75 years and up senior citizen having only pension income and interest income. And interest income also from the same bank in which pension is put up. Usually, once the employee retires, the monthly pension is transferred to his bank account. And in the same account, he can make FD, saving account and all. And he will receive the interest income also. And if he is above 75 years, he is not required to file his return from financial year 21-22. Is this clear to all of you? Now, why this kind of relief? I'm discussing in return. Definitely, we will again discuss it in the third amendment video in the TDS also. I'll tell you, other than this, there are so many amendments which have linked effect. Means that amendment is having 2-3 effects. Okay, like last time we did LIC on maturity is taxable. So now that has got an effect. It's not exempt under section 1010D. LIC is taxable. Then even the capital asset definition in the capital gain, now they say ULIP. Whatever LIC you are paying above a limit, that is also a capital asset and taxes as you tax your short-term capital gain on shares. Section 120. So what I'm saying is, this is not called jumping here and there. This is called as doing the things with understanding. So if you are a senior citizen above the age 75 years, you are receiving only pension income and you are receiving interest on the in the same bank account in which pension is received, then you are not required to file your ITR. But this burden is put up on bank. See, he should furnish all bank details and all in prescribed form. Bank will consider all ATC to ATU deduction if he has paid Mediclaim and PPF and all. Bank will also give him rebate. Yes, rebate under section 87A is allowed for resident individual. Yes. So bank will also give a rebate. under section 87A, and then bank will compute the tax and deduct the TDS according to the slab rates for that person under section 194P. Is this clear to all of you? So this is going to impact your return of income chapter and your TDS. The way TDS is deducted and all that we will do in the third amendment lecture, which is like very important. We will discuss 194 OPQ 206 1H TCS, and we will combine it and we will solve problems also. Okay? So, relief of senior citizen is clear to you. Next, once we miss out the date of the return, can we file belated return? हाँ? किसी का बर्थडे मिस हो जाता है तो then next day, oh really sorry, wish you a very happy belated happy birthday wishes. Same way, we miss the due date of filing the return, July or October or November. So can we file late return? Yes. Till last year, the belated returns date was 1 year from the end of the previous year. That was end of the assessment year. So 31st March 21 return, you could file by 31st March 22. From this time, they have made it more strict and more disciplined, and they have made it 3 months prior to the end of assessment year. Let us read the language. If the assessee fails to file the return with the due date, then he can file belated return before 3 months prior to the end of the relevant assessment year. I want to repeat and say, if assessee fails to file the return within due date, that is July and all, then he can file the belated return 3 months prior to the end of assessment year. What is your financial year? 21-22. What is your assessment year? 22-23. Right or not? So now the end of the relevant assessment year, it can be filed is 31st March 23. But 3 months prior to that, minus 3 months. फिर से एक बार. Understand in such a way that if required, you can explain. I know you all are not going to become teachers like Dipti ma'am and other teachers, but if you listen to the class, you understand 50%. If you write notes, you understand 70%. But when you can explain to someone in the way you have understood it best, then 100% it goes to in your mind and your pen will flow. Trust me. So make sure you stretch your hands first and tell to your friends, Chalo, we have all watched the amendments video and let us take the gist of it and you explain it. Financial year 21-22, assessment year 22-23. So this financial year's return can be filed in the next year in which income is assessed and you pay tax and file the return by 31st March 2023. That was earlier. Now, minus 3 months means 31-12-2022. That's what is written here. That's the last date in which you can file return. Is this clear to all of you? Which return? Belated return. And now, Control C and Control V. Yes. So, Control C and Control V means same applies to section 139.5 for revised return. If there is any error or omission or you missed out taking a deduction or something went wrong and you want to file revised return, that can also be filed 3 months prior to the end of the relevant assessment year. So 31st March 23 is return, 31st March 2022. That's the last date of filing the belated or revised return. Clear to all of you, right? If I can say, if you're not getting confused in the we are doing Finance Act 21. 22 में फिर एक amendment है, so that we are going to teach you in the next month, right? And the next year. So right now, is this clear to you? Okay. Now listen, all of you, because we were having time till 31st March 2023. If you file late return Okay, that means if you miss the due date, you have to pay interest under section 234A. Do you all remember? 234A for late filing the return, 234B for default in installments, 234A for late filing of the return, 234B for not paying tax 100% by 31st March 23 22, your end of the year, and 234C for default in the installment, 45% and 75% and all. So, if you file your return late, you have to pay interest under section 234A plus 234F fees, which was like up to December 5,000 and beyond that 10,000. Up to beyond that is not there. So now the 234F fees has been changed for late furnishing of the return, and it says if the total income does not exceed 5 lakh, total income after all the deductions ATC to ATU, total income does not exceed 5 lakh, 1,000. If total income exceeds 5 lakhs, then it is 5,000. Only two. Please make sure you change this if you are using last year's material. In the last year, we have printed it as 10,000 and 5 lakh limit and all. But up to December ke baad, you are not allowed to file the belated return. So if you miss the date, of course you have to pay 234A interest plus if your total income is less than 5 lakh, then fee is 1,000. Total income exceeds 5 lakh, then the fees is 5,000. Fee for default in in linking Aadhaar and PAN, 234H. Now, this is since long because of the pandemic, Aadhaar and PAN should be linked by 2020, then 2021 and all. Now, latest they have said Aadhaar and PAN, if they are not linked by 31st March 2022, your PAN card will become invalid, inoperative. Okay, now after 31st March 2022, you rush and go to link the Aadhaar and PAN. Then you have to pay a fees of rupees 1,000 under section 234H. One more amendment I am coming for return, which is for final, but look at the screen. If you want to take any running notes, take it. If you want this PDF to be downloaded, then download Concept Classes app from the link below. And in the free study material, I have given costing FM theory questions, these amendments, and many other materials you will find there. Shall we do a gist? I said the first step of learning is listen to the concept teacher is saying. Second step of the learning is solve the problem with the teacher. And third step is do it independently. Third step abhi nahi aayega. That will come in the revision classes. In the revision classes, whatever amendment I am teaching, I will solve practical problems for that. And then let us see, have you digested the amendment? Are you able to apply it and solve the case studies, the MCQs and all? Yeah, definitely. Some students have requested. So definitely, we are going to take up the MCQs discussion also. And some of you are requesting, yeah, set off, carry forward or clubbing में भी छोटा topic है, but unbelievably 10 marks questions are asked on set off. So just one single lecture I have made flowcharts and I have given it, watch that video in the playlist. Okay, taxation concept playlist, if you watch the video and watch all the videos in full screen and put headphones, and the best benefit of these videos are listen. Sometimes it's not possible to watch the screen also, you're traveling, moving, at least put up this video and headphones और सुनते रहो, सुनने से भी फर्क पड़ता है. Right, चल. So that's all for the amendment. First one is senior citizens above 75 years, if they have only pension and interest income and they furnish all the details to bank will deduct TDS after considering all deductions and rebate and all. And they don't have to file the return. And belated and revised return 31st December after completion of the previous year, 3 months prior to the end of the assessment year. And then fees is changed now. If you file the return late along with 234A interest, you have to, you remember ma'am ye double burden क्यों है? When I'm filing late return, I am paying interest at the rate of 1% per month, 12%. Why do I have to pay fees? Some people, they're saying, oh, my income is like nothing. I have income 3,50,000, then 1,50,000 I put in AC, 80C, so my income is nil. So even if your income is nil, if you're required to file the return, you should file on time, no? Can you say मेरा tax नहीं है तो मेरी मर्जी, any time I can file the return? Even if your tax is nil, you may be able to avoid 234A section interest. You cannot avoid 234F fee. So 234F fee बिल्कुल लगेगा up to 5 lakh. If your total income is, it is 1,000. Beyond 5 lakh, it is 5,000. Okay, right? And if you have not linked Aadhaar and all, then the penalty is 1,000. If you have not linked till 31st March 2022. Done. Now next is time limit for assessment has been reduced. This is relevant for all the final students who are having assessment, scrutiny, search, rate in detail. Time limit for issuance of notice for assessment, reassessment has been reduced from 6 years to 3 years. And in case of severe tax evasion, wherein there's a concealment of income, notice can be issued up to 10 years. 10 block of asset years, you can issue the notice. If the undisclosed income exceeds 50 lakhs or more, and notice is to be issued post prior to the approval from specified authority, being principal commissioner, director. If 3 years are, you want to go 10 years back. Now, books of accounts are only maintained for the last 7 years. Still, you can go back 10 years and you can ask them to file the return. But otherwise, normal assessment and reassessment cases, time limit is reduced from 6 to 3 years. I'm going to take separate video lectures I'm going to make for tax amendments of final. But these are not like inter amendments. These are basic amendments which are applicable to all the students. Okay, right. Okay. One small amendment is there in deductions. You remember that if you have taken a small housing loan and your amount, your value of the house and value of the loan is say come hai, then you get deduction under section 80 EEA up to 1,50,000 over and above the interest on housing loan. Interest on housing loan is deductible in self-occupied and all up to 2 lakh, in let out and deemed let out without upper limit. उसको छोड़ के भी if you have taken the loan from bank, housing loan for a small value and within the limit, then you get additional deduction of 1,50,000 under section 80EEA. This was there pehle se. Now, but one condition was loan has to be sanctioned between 2019 and 21. So instead of 21, now it is 22. 80EEA is extended for one more year. Yes, 80EEA ये housing loan के लिए, 80EEB for that vehicles and all who run on battery. These are small deductions but very, very relevant. Weightage wise, 80C, 80D, 80EEA, 80EEB and all. Okay, so this 80EEA, they have changed the date to 31st March 2022. So here I complete with, one second. So here I complete with the revision for return of income and deductions. Okay. Very important is, I'll tell you, just I had a talk with so many CMA students also. CA students, they have offline exam. Last year also they had. CMA students are having online exams. So in online CMA final exam, they have been asking these basics from salary, from house property, 54 GB and all, from capital gains, slum sale, small objective questions, MCQs. But weightage wise, it's not small, it's 20 marks. Even CA students are having 20 marks MCQs, which they have to mark on OMR sheet, right? So, very important is to study with that minuteness, practice all the problems which are given behind your study material, MCQs and extended questions, all. Okay? So, how did you like the learning of part two? In the part one, I have given you lot of notes also, writing notes. If you want, I can share the screen again. But did you understand this way of learning? Huh? You know, today I have come across, I read other than these books also, 2 seconds. So I've come across that whenever something is seen effortless, like today's live, always I take live classes and revision classes on Saturday. But at 5 o'clock, I decided that I have to take it today because I won't be able to make it tomorrow. And I need to keep that commitment, promise. I have to complete all the three tax amendments and then the revision lectures. Already, revision lecture of house property is also uploaded. So I came across a phrase, dear students. It says, whenever you see some things or some outputs which are effortless, chalo YouTube on kiya aur shuru ho gaye, it is not. Behind that, actually, there are a lot of efforts. I'm not praising myself, but I know how much time it takes to consolidate the notes, to learn, to bring the best examples, to think, to study, and then to arrange this timing. And the energy of teaching in a regular class. Yeah, do it, chalo. Take down the notes. I'm sitting. If you have doubt, ask me. Can't do that right now. Literally. So it takes a lot of energy. If you feel this energy is fruitful, I'm going to do it. It's not that I'm asking you कि मैं ये कर रही हूँ मैं. But if you feel this energy is fruitful and you're feeling the worth of it, do share this video with at least 5 of your friends and do comment below your learning. Right? Chalo. Sharing with all of you right now. Just 1 second. One second. Huh? The part one. Why the reason I'm going in the part one is because yeah, the reason I'm going in the part one is part one we have done the revision, residential status and all, but we didn't do the revision of the salary. And for goodwill, one student asked me very nice question. I want to reply that. Okay, all right. So let us share. I'm sharing the screen and download all this from our app and check it. 1 second. 1 second. It takes time little to share these notes. Part two is, I hope, clear. Sharing with all of you right now. Part one. All right, here we go. Last class, I gave you this amendment. Huh? Whatever amount is received on maturity of insurance, if it exceeds 10%, in a single year, if the premium exceeds 10%, 15% for handicapped also, then in that case, or single year the premium exceeds 2,50,000, single premium in a single year exceeds 2,50,000 or multiple premiums in a single year exceed 2,50,000, then these kind of policies, when they are matured, the amount received on maturity is not exempt under section 1010D. It will be taxable under capital gain. And because of this only, there is an amendment in the definition of capital asset. movable and circulating and all, and it includes ULIP on the maturity. Okay? All that I have discussed, I have given you the flow chart. Then residential status where we have seen like online, we have Zoom is earning so much online because of the COVID and all classes were online. So we use so many foreign software, so many learning, so many video lectures. We joined so many courses. I gave you the example that I have joined a music course from Trinity Institute of London. So Trinity Institute don't have any office in India. They have never visited India. Don't stop watching the video from here thinking it's a revision of the first one and you have already watched first one. I'm taking this in the sequence and I will teach you salaries, very important amendments which we have not covered up. So coming back to, so these people have earned so much by just their online presence. So if aggregate of payment or transactions they have had in India exceeded 2 crores, or the number of users should at least be more than 3 lakh. In any case, they have to pay tax in India. How they have to pay tax and all that they will decide. Sure. I didn't teach you two amendments in income from salary. One is interest is taxable, that I'll teach later. And right now, overall limit. This second point is relevant. इसको 5 स्टार खिलाओ, किटकैट खिलाओ, ये कहीं ना कहीं आएगा MCQs में या कहीं. Employers contribution to new pension scheme. If you want, you can write it as Atal Pension Yojana. New pension scheme is fully taxable under the head salary. Yes, employers contribution to the pension scheme under section 80 CCD is fully taxable under the head salaries. However, you can avail the deduction under 80 CCD. You remember 80 CCD 1 and 2 limit hai 10% of the basic and D and all. So employers contribution सैलरी में तो पूरा ही टैक्सेबल होगा न्यू पेंशन स्कीम में, but you get a deduction in 80 CCD up to a limit that you will study in deduction chapter. Now we also contribute to recognized provident fund. Up to 12% of basic and DA is exempt. Interest is exempt up to 9.5%. I'm just revising what you already have in your syllabus, right? So this RPF, this new pension scheme, and superannuation fund. Superannuation fund is also another fund like PF only where employer employee all contribute. For all this put together, the upper limit is 7,50,000 in a year. Yes, there's a combined upper limit of 750 in respect of employers' contribution in NPS, employers' contribution in superannuation fund, and employers' contribution in RPF. Any excess above this will be taxable. See, RPF has its own limit. If you contribute up to 12% of basic and DA, okay, beyond that it will be taxable. This 80 CCD pension scheme, it has its own limit. Superannuation fund has own limit. But put together, employer cannot contribute more than 7,50,000 in a single year. So if this way it is disallowed, separately again it won't be disallowed. I think if you remember this for the limits and MCQs, it would be more than enough. And one thing is very sure. In question number 1, only 14 marks where they give you compute the income, it is business head usually and capital gain. And with salaries, they ask you deductions. So these are the two heads ki jiska koi escape hi nahi hai, salary and business head. It's not ki capital gain is not coming. Of course, they are asking questions, 6-7 marks weightage, separate question for capital gain also. House property, sometimes full question is there, 5-7 marks, sometimes it's not there. Sure. All right. Next. Yes. So what is one amendment in the salary? National Pension Scheme, RPF, Recognized Provident Fund, and Superannuation Fund Put together, employer's contribution cannot exceed 7,50,000. ठीक है? Now, okay. Now, before I start explaining this next very important amendment, one thing I want to ask you. Yeah, listen carefully and tell me. Yeah, there are four types of the PF. One is PPF, where employer cannot put the money. You yourself have to put the money in public provident fund. You can put maximum up to 1,50,000 and claim a deduction under section 80C. That's done. Bye bye. PPF is over. Second is SPF, Statutory Provident Fund, as per the PF Act 1952. What you contribute and what employees contribute, everything is exempt. On maturity, what you receive is also exempt. Interest is also exempt. हो गया? PPF is clear? Please let me know if my explanation is not clear like this. I am looking at the screen and explaining. I have that table also in the salary chapter where everything is explained. But sometimes I feel if I am explaining like this, you are looking at me and it's more clear. PPF is clear. Employer cannot contribute. Employees contribution is 80C में deduction मिलेगा and interest is exempt. SPF, employees contribution all exempt and 80C में deduction भी मिलेगा. Interest is also exempt. Maturity is also exempt. PPF also maturity is exempt. Almost like same. Then you have RPF. Recognized Provident Fund is employer's own provident fund. Employer's own provident fund. Recognized provident fund, but they've got it approved from the commissioner and all, and they are running. So employer can contribute maximum 12% of the basic NDA, which is considered for retirement. Uska 12% they can put in the RPF. Beyond that, it is exempt. But employees were putting limitless. RPF mein they were putting limitless. The reason was interest. And at maturity, whatever amount you get on the maturity of RPF is exempt. So if I put my money anywhere in the share market, tax लगता है, dividend, capital gain. If I put it in properties, rental पे भी tax लगता है. So if I put my excess earning in recognized provident fund as an employee, employer का limitation is there for contribution. Interest is also exempt up to 9.5%. But if the employer is giving 13% interest, remaining 3.5% will be taxable. Employees contribution was exempt. मतलब पूरा exempt था, and interest was exempt, and on maturity what you receive on employees contribution was exempt. So then government felt कि ये तो बहुत गलत हो रहा है. The employees are earning income and they are not paying tax. Now they have put up a limit. Employees contribution up to 2,50,000. On 250, whatever interest you receive is exempt. Listen, because this is a new concept, listen, then read it with me. And third, I will go to my notebook and make you write the flowcharts also. Listen, employees contribution to the SPF or statutory provident fund or recognized provident fund up to 2,50,000. On this 250, whatever interest you receive is exempt. But suppose if you contribute 4 lakh, then 250 will go in a separate account. Interest is exempt. Remaining 150 will go in a separate account, and on that, whatever interest you receive will be taxable now onwards. Income from other sources. They have not clarified, but obviously, because it's your own contribution. And URPF तो एक अलग ही दुनिया में है. No amendments, but because I am discussing all provident funds, shall I discuss that? PPF no amendment. SPF, RPF amendment is there. I am discussing. URPF no amendment. Unrecognized provident fund. You contribute, no tax. You receive interest, no tax. But on maturity, On maturity, when we receive interest and principal, then employer's contribution, and interest on employer's contribution is taxable as profit in lieu of salary. Employee's contribution, employee's own contribution is exempt. Repeat. Unrecognized provident fund mein employer has put money 100 and you received interest 10. 110 on maturity lump sum with interest is taxable under head salary as profit in lieu of salary. Employee's own contribution to URPF exempt. You have put the money and you have received. If you give loan to someone, interest is your income, not the loan. So employees' own contribution to URPF, what they get on maturity, exempt. Interest on the URPF. Interest on the URPF is taxable under income from other sources. So bye-bye PPF, bye-bye URPF. Now, SPF and RPF, you actually, I don't know, I feel they should have put the limit कि इससे ज़्यादा contribute ही नहीं कर सकते. Like in PPF, even if you want, can you put 10 lakh rupees in your PPF? Answer is no. Up to 1,50,000. That too for yourself. Others can't put. I mean, say your employer and all. No. But here they are saying SPF and RPF, जितना डालना है डालो. But up to 2,50,000, put in a separate account. On that 250, interest is exempt. Balance what you put, interest is taxable. Ma'am, what about 10 lakh, 15 lakhs we have put up before March 21? That is all exempt. No retrospective amendment for this. Clear to all of you? And if your employer is not contributing only to the RPF, only you are contributing, then this limit of 250 will become 5 lakh. Employer is not putting in RPF. I am putting 6 lakhs. 5 lakh go in separate account and interest thereon is exempt. 1 lakh go in separate account. Interest is going to be taxable in IFRS. Clear to all of you? And apart from this, there's a different formula also. In a way, it is going to be taxable and all. I think not required. Sometimes, income tax is so vast, GST is so vast. Rather than buttifying the formula और उसमें deep जाने से अच्छा है, little part, I think it's okay. If required, definitely with the RTPs and all, I will do the problem. But at this level, it is not required. पूरा एक साथ पढ़ने जाएंगे ना तो सब खिचड़ी बना देंगे. तो हम तो हैदराबादीज नो, so we eat biryani. So निकाल दो. Bay leaves, cloves, elaichi, which is for the flavor, remove it. Let us read right now from the screen what is the second most important amendment in salary chapter. Chalo. Yeah, look at the screen. Any payment from PF to which Provident Fund Act applies or from any other notified fund is exempt. Interest accrued during the previous year in the account of employee maintained by the fund shall not be exempt to the extent it relates to following amount. Where employer is giving contribution, interest on employee's contribution. Yes, employer is also contributing. Then interest on employee's contribution made after 1/4/21 in excess of 2,50,000 per year, interest is taxable. It is taxable. It's not exempt, means it's taxable. But if employer is not contributing, interest on employees' contribution made on or after 2021 in excess of 5 lakh per year. 5 lakh per year is going to be taxable. Same for the recognized provident fund. Generally, amount received on maturity of SPF is exempt under 1011 and this RPF is exempt under 1012. But interest in excess of 250 contributed after 1/4 will be taxable when employer is giving, and when employer is not giving, limit will become 5 lakh. Clear to all of you? Right. Yeah. Of course, we have done business head and all, but wait, no, इससे related कुछ एक 1 second. I'm going to my notebook. Can you all open your notebooks, please? Yeah. See, those who have missed the class, this is what we have solved for goodwill. All about ULIP. We have made the flow chart. And I've told you that slab rates, there is no change except this last one. Okay, now let me see what I'm writing. Employees contribution to SPF, Statutory Provident Fund, and RPF. I hope URPF and PPF is clear. And I don't know if you're watching, I make 10 videos for 10 minutes conceptual videos for marginal relief, for maximum marginal rate, only for URPF, like that. So if you like those videos, you can watch in taxation concept videos. Sorry. Employers contribution to SPF and RPF. Okay. Now let us write in that first point. Up to 31st March 2021 exempt. So, in short, no retrospective effect of amendment. Amendment का कोई retrospective effect नहीं है. 31st March 2021 तक जो है ना, it is exempt. And in this only, contribution after 1st April 2021 up to 2,50,000 exempt. Interest, sorry, not contribution. Interest on contribution up to 2,50,000 exempt. कौन contribute कर रहा है? Employee. And up to 31st March, whatever is the balance, interest is exempt. Right? थोड़ा language सुधार लो मेरे flow chart का. फिर से, whatever is the balance up to 31st March 2021 in SPF and RPF, interest on balance is exempt. Interest on contribution after 1/4/2021 up to 2,50,000 exempt. Interest on contribution after 1/4/2021 beyond 2,50,000 taxable. Whatever interest you are receiving on contribution made to SPF and RPF beyond 2,50,000 is exempt. So if you contribute 4 lakh, 250 will go here. 150 will go to separate account. Whatever interest you receive on 1,50,000 will become taxable. Now in this, see, if employer doesn't contribute, if employer doesn't contribute to SPF and RPF, then above limit of 2,50,000 will be taken as 5 lakhs. Up to 5 lakh it will be exempt, and beyond 5 lakh it will be taxable. Yes. ठीक your time, take this note and here only. पूछो कोई डाउट है तो use the chat box. You can ask if you have any doubt in the chat box. Finished writing? So now SPF and RPF, whatever is balance up to 31st March 2021, I'm repeating the gist in 2 minutes. Up to 31st March 2021, whatever is the balance in SPF and RPF, or that balance as of now also, even if it is within the limit or beyond the limit, it is exempt. Okay. One second. It is exempt. And and whatever you're contributing after 1/4/2021, employee contributes to SPF and RPF. If employer is not contributing up to 5 lakh, he can put, and interest on 5 lakh will be exempt. Beyond 5 lakh, whatever he is doing, put it in a separate account. Up to 5 lakh, exempt. Beyond 5 lakh, taxable. Up to 250, exempt. बियॉन्ड दैट टैक्सेबल. इसको एक छोटा सा एग्जांपल बना के बिल्कुल अभी सॉल्व करते हैं ना. इफ श्यामलाल contributes 6 lakhs to RPF, write down. Shyamlal contributes rupees 6 lakhs to RPF, where I'm just giving on my own. I hope it is clear. Shyamlal contributes rupees 6 lakh to RPF, where balance is 10 lakhs. Interest at the rate of 5%. Just assuming some simple rates. Interest at the rate of 5%. Solve taxability or show taxability for financial year 2021-22 with both options. दोनों options के साथ हम solve करेंगे. Write down the case. See, they can ask you these questions. तो ये लिखो. If Shyamlal contributes 6 lakhs to RPF in the financial year 21-22, where already existing balance was 10 lakhs and interest is 5 lakhs, solve the taxability with both options. See, as you all have an aim to become CA or CMA, I want to share my aim. I also want to become an author wherein I can make simplified book with all the flowcharts with my own way of teaching and the way I give booster notes for accounts for taxation. Since years I am giving. If you have studied with me in inter, final or any of your friends. So उसके लिए प्रॉब्लम बनाते तो आना चाहिए तभी के तभी. तो चलो करते हैं. Option 1. If employer contributes, yes, you're true, employer is contributing, so employer is contributing in SPF or RPF जो भी है, employer is contributing. Then इसको दो पार्ट में डिवाइड करते हैं. आई एम नॉट डूइंग द आंसर इन द वे जैसे जनरली हम एक के नीचे करते हैं. आपको प्रेजेंटेशन समझ में आए इसलिए आई एम डूइंग इट इन द फॉर्म ऑफ फ्लो चार्ट. फर्स्ट लेट अस डू व्हाट इज नॉट टैक्सेबल. व्हाट इज नॉट टैक्सेबल? financial year 21-22. Financial year 21-22. What is not taxable? Opening balance. How much opening balance is there? 10 lakhs. Plus addition. How much addition they have contributed? Look here, how much addition they have done? 6 lakhs. An employer is contributing. So if employer is contributing, 250 will come here. Taxable interest. So 6 lakh he has contributed minus 250 is exempt. Remaining 3 lakh 50,000 contribution is interest on 350 is taxable. Now what is this balance? 10 lakhs is opening balance, up to 250 you can put. So on this 12 lakh 50,000, how much interest you are getting? 1250. 1250 पे क्या रेट से लिया हमने? 5%. हाँ, रेट कुड बी एनीथिंग, कॉन्सेप्ट पे ध्यान दो ज्यादा. 60 to 500 interest is exempt, and here 3,50,000 is the contribution. So on 3,50,000, 5%, that is coming to 350 into 5%, 17,500 interest is taxable for employee. Employee has contributed 6 lakh. 10 lakh opening balance तो है, no retrospective effect. 2,50,000. Note down this example. I hope you all have noted first the question carefully. यहाँ से शुरू हो रहा है question and then answer. 17,500 fully taxable. Shall we all go to option 2? See, while watching the live, keep the notepad, no, so that you all can write all the amendments. Option 2. If employer, this is employer. If employer doesn't contribute to RPF, तब फिर कैसे taxable होगा? Taxable, first we will write non-taxable, non-taxable. This side I am writing it as a U. Taxable. How much is the opening balance? 10 lakh. Plus addition. Sometimes these touch screen give the trouble and we are not able to maintain the speed. Helpless. But then maybe technology is good. How much addition they can make? 5 lakh contribution employee can make, and interest up to 5 lakh will be exempt because employer is not contributing. So what is the balance? 15 lakh. Interest on this 15 lakh at the rate of 5%. Whatever interest you receive, it is exempt. 15 lakh ka 5%. 75,000 interest is exempt. And now, how much contribution they have made? 6 lakhs. Minus 5 lakh to exempted. So what is the contribution which is taxable? 1 lakh. What is interest on 1 lakh at the rate of 5%? 5,000 is taxable. 5,000 is taxable. Nice, clear to all of you? Take down this flow chart. Hello Karthik and all those who are watching. If you have any doubts, you can ask. Because this is going live, unless you don't put the message, we are not getting. But this PF amendment is surely going to touch. And sometimes we get exemption, sometimes we lose exemption at 58, 59. कभी एग्रीगेट नहीं मिलते हैं 197, तब ये छोटे छोटे कॉन्सेप्ट बहुत कम आते हैं. Yeah, so note down, and if you have, thank you so much all those who have joined live and watching patiently all the amendments. Did you understand the four types of PF? Of course, in the salary revision lecture also I will do that. Didn't realize it's more than 1 hour and still I have to do 43 CA. Let me see, 43 CA examples we got it. Finished writing? Yeah. Last time we wrote like this for goodwill also. Goodwill is taxable only up to, I'll share the screen. 1 second. One second. Okay, here we go. Dekho. So what are the two amendments in salary? One is RPF, National New Pension Scheme, sorry, not National, New Pension Scheme, Atal Yojana and all, RPF, and approved superannuation fund put together. It is income from salary, mein the upper limit is 7,50,000. And second is, gist of this is, if the employer is contributing, then up to 5 lakh you can contribute, and interest on 5 lakh is exempt. If employer is not contributing, then you can contribute, sorry, up to 5 lakh, and interest on 5 lakh is exempt. If employer is contributing up to 2,50,000, interest जो भी contribute कर रहे हैं, interest on that is exempt. Beyond that, it will become taxable. ठीक है? Right. And we have already done the amendments for residential status. We have done amendment for taxability of LIC, including capital gain. Business head, I told you, tax audit limit where less than 5% is cash receipt and cash payment. So unke liye the turnover limit was 5 crore till last year. Now it has become 10 crore. Acha, goodwill, I have made some more addition because goodwill has been excluded from the block of the asset with retrospective effect. Goodwill is not now a part of the block of asset intangible assets. Agreed. But intangible assets is like, how do I say this? Yeah, intangible assets, copyright, patents and all. So, or genuinely say, what is goodwill? It's that you are getting additional business because of the brand. We have accounting standard 26 also for this. So generally the brand value will increase. It's not going to depreciate, right or not? So they said, and we do amalgamation and all, and everything we put in goodwill and capital reserve, the balancing. So if you're purchasing my running business for 5 lakh, and I say, okay, you will get ready customers in the name of Dipti ma'am, so 5 lakh, or plus along with that, I was saying ki 10 lakhs you pay me more for goodwill. So purchased goodwill pays, students were, all the business entities were charging depreciation. Now that depreciation you cannot charge with the retrospective effect from 1st April 2020. So when you cannot charge with the retrospective effect from 1st April 2020, then last, you charge separately the depreciation for goodwill. Suppose you have purchased goodwill in 2018, 18, 19, 19, 20, you charge depreciation separately. And on 1/4/2020, whatever is your block value, remove the value of the goodwill. Okay, and on remaining block charge depreciation. Acha, what is the original cost of goodwill minus depreciation till 31st March 2020? This value of goodwill will be considered when you sell this goodwill and business, and whatever difference comes will be taxable as short-term capital gain. I'll make sure we solve some more practical problems. But abhi dekho, opening WDV 1/4/2020, Finance Act 21 came, but before the filing, someone asked me, ma'am, if this is Finance Act 21, And if this amendment came with the retrospective, then what about the depreciation which we have already charged in 2021? 2021's returns were finalized in 21-22 assessment year. And before that, this Finance Act already came in the month of February. Yes. So, yeah, little late because of the COVID and all, but aa gaya tha before the end of the financial year. So last year only, what is opening WDV, add all the purchases of intangible asset, balance minus sale value. This is important. Minus the WDV of the goodwill, you remove whatever balance you are getting. Yes, charge depreciation and dot and continue. And when you are selling the goodwill, purchase price would be the cost of acquisition. However, depreciation up to 31st March 20 shall be reduced, and WDV on 31st March 20 minus the sale value will be taken as short-term capital gain. Okay. LLPs are not considered for presumptive taxation for professionals, 44 ADA, and employees contribution for PF and all you have to make by 15th of next month. You can't take it in. I'm 43B. I'm rushing because I've already explained this in the first video lecture. Now, actually, 43 CA I wanted to take, but it will take time. At least 15 to 20 minutes to solve all these examples. Yeah. कैपिटल गेन में भी एक दो अमेंडमेंट हैं जो आपसे डिस्कस करना है. ठीक है. So for today, I think this much is enough. Write all the notes what you have taken for return of income, for belated return, for fees 234, for linking of the PAN. Revise this much and stay connected with me for the third amendment class, wherein I have left 43 CA. Very nice amendment, very relevant. 43 CA जो पहले है ना वो भी पढ़ के आओ. When you have to take stamp duty value on agreement and stamp duty value on registration. Because if I explain the concept and if I solve the example, it will take half an hour more. So we have decided to keep every amendment lecture at the most 1 hour. That is enough because you need to repeatedly watch it, digest it, take notes. So we will do the remaining along with the TDS and TCS amendments all in the next lecture. So as I said that today before time I took up this revision lecture because something is scheduled for Saturday tomorrow. So stay connected with this channel and hit the notification button so that whenever we are going live, you can ask your doubts. I can see all your messages here and definitely you have only put up the message about the goodwill and I clarified. So wanting to give my most way of explanation and knowledge through these YouTube videos, but of course, sitting on this place, taking the live in YouTube, I am telling you, YouTube lectures are very good for revision, for listening. कभी कभी स्क्रीन ना भी देखो और सिर्फ सुनते रहो ना, रिविजन के लिए बहुत अच्छा है. It's very good for learning the concept, but regular classes you need to attend. Online live or face to face or whatever, it's not the substitute. You will not realize now, मैम मैं तो इसके उसके मिला के YouTube lectures देख के पढ़ लेता हूँ, पास हो जाता हूँ, maybe some miracle with you. You will realize it when the result will come. And really sorry to say, dear students, it will be very late then. You have already missed out on 6 months. So don't do that. Take quality, good, regular coaching supported by these conceptual and amendment videos in YouTube. Being very honest with all of you. Thank you so much for watching the video till end and staying connected with us. Thank you all of you who have joined right now. Wish you very all the best. Lots and lots of blessings and wishes. And this is the quality good time to study. If you want ki you should not panic or there should not be any restlessness in 3 hours of exam, तो वो नहीं होगा provided you are putting 110% effort now. Quality good hours of studying, not jumping the concept, videos, problems, and putting 100% genuine effort now will keep you relaxed in 3 hours of exam. Bye bye. Have an amazing weekend. Signing off now. See you, Dipti Chheda here. Bye bye. Thank you.